Hi guys, it's me, Teresa Perrin, and I want to discuss ticker SONN with you. If you follow me on Twitter or you watch my daily morning updates, then you know that for the last 2 days I've been calling out this ticker and it is up immensely and I think it's going to continue. Wait till you see what I found out regarding insider owning and institutions. And guys, I am very bullish and this is why. So let's get started. Please remember, nothing I say is financial advice. Always do your own DD. If you could, smash that like button for me. I'd greatly appreciate it. All right, guys. So SONN is up 46.63% today, and it's up additional in the after hours. Currently, the 52-week low is $1.10, and the 52-week high is $9.59. Get this, the volume on average is 3.68 million shares. Today, it traded over 115.8 million shares. Guys, that is 22 times the entire free float. Actually, 23 times the entire free float because the free float's 4.86 million shares. So it's over 23 times. Forgive me, my math was a little bit off there. This is insane. And guys, where are these shares coming from? Your guess is as good as mine, but my guess is they are naked. The technical analysis is showing short-term bullish indicator. Medium term, it's still showing that downward trend, but it has a strong bullish signal. There are 6 bullish and no bearish signals being given. Of the 2 analysts that rate it, it is given a low price target of $22 and a high of $28 with an average of $25. Now, what brought this to my attention this week? On Monday, pre-market, prior to my recording, I saw this. Sonnet Biotherapeutics announces an agreement with Janssen for the evaluation of 3 Sonnet product candidates. And guys, interestingly enough, this Janssen is also the company that had an agreement with EPIX that stopped their enrollment in the clinical trial earlier this week. So I found that connection very intriguing. And there's something else that I'm going to talk about in a minute that's also very intriguing. Now, Sonnet is showing only a short interest of 3.57%. I don't buy it for a single second. There are currently no shares available to borrow. And the cost to borrow, guys, is 96.19%. Now, ask yourself, if there's really only 3% short interest, would it be that expensive to borrow it? And why are there no shares available to borrow, to short? Guys, I think you know the answer, and I don't have to speculate. Now, here I find this very interesting too. The short volume ratio has been between 5.33 and today's 53.93%. Today is the highest day the stock has had. And if you look relatively often, it's fairly low. I mean, the highest prior to today it's gotten has been between 48 and 48%. But, you know, a lot of days it's only between 11, 14, 15%, and yesterday it had, or the 28th rather, it had the lowest, 5.33%. So I just find that extremely interesting. Why is that happening? And then look at, there must have been the 29th and the 30th, no short volume in the dark pool. So something's going on that meets the eye, which caused me to look at this. Now, currently we're showing that 25 total institutions own this company. And they own 85.9% of it, guys. 25 of them, they're all long. There's no short positions, okay? Now, the insiders own 12.39%. So you mean to tell me that 97% of this company is owned by insiders and institutions? There's only 4,879,989 shares, guys. And of those 4 million, 114 million shares traded today? Come on, something's majorly up here, and I'm calling BS. This short interest and these amount of naked shorts that they had to have created has to be millions and millions and millions of shares. This could have an epic short squeeze, in my honest opinion. Guys, anything could happen. You know, we all know, unfortunately, how this sometimes plays out. These market makers or whoever's creating these shares, generally I would say it's the market maker, ends up going to the company and getting the company to issue an offering to cover all their naked shares. So be on the lookout for that. That is the worst thing that I see happening here. But remember, there's a lot of institutions involved in this play as well, 25 of them. So you know, that's the risk, but I think there's going to be a huge opportunity for a move to the upside, and we are still trending on the watchers, number 5 on StockTwits. Guys, you be your judge, decide whether you want to get in this or not. Please remember that, yes, it is a high-risk play, you know, due to the fact that more than likely they're going to have to do an offering because market makers are going to get to them. Plus, guys, they must be out of compliance for a share price with only 5 million shares. You know, they have a minimum requirement. You know, the share price obviously needs to hold above $1 for NASDAQ listing requirements, but they also have to have a 35 million market cap, which until this goes to $7 or above, they are not even consideration for that. So if they were smart, they would let this run up naturally, let these market makers screw themselves and naturally drive their price back up rather than bailing them out. And I hope to God that one of them's listening and hearing this, because they have an opportunity to not only you know, get their company back on the right track, but also to really boost their market cap if they don't do this offering, because there will be a lot of retail that gets into this. As you can see, there already is, and it could drive this price much, much, much higher. And, you know, with the amount of insiders that own, they could make themselves very wealthy as well. So, you know, it is what it is, guys. I'm going to tell you right now, be on the lookout though. So don't say I didn't warn you, but I think that this is a very, very rare opportunity with a lot of upside potential if it's played correctly. Thank you so much for watching and have a fabulous day. Please remember to smack that like button and leave me a comment below if you found this helpful.